Hello friends, I hope you all are doing well and staying safe at your own place. I, CA Pujin Kapadia, welcome you all on today's lecture on the subject Advanced Accounting and Auditing, Paper 5. Friends, as you know, we had started with the topic of types classification of audit, under which I had told you that we are going to study different kinds of audit from the viewpoint of various bases of classification. Quickly reviving all the points that we have covered. First classification was on the base of the form of organization or the legal viewpoint, under which I had explained you two broad classification. First was compulsory, that is audit which is required under any law which is in force, under which we had studied various types of audit and the act under which they are supposed to be conducted. Under which I had laid more stress on the one thing, that was income tax audit. It is governed by section 44AB of Income Tax Act 1961. As I have told you to remember the limits, that when audit becomes compulsory under this act, if I am running a business, then the limit of my turnover is 1 crore. If my total turnover exceeds 1 crore rupees, then I am required to get my books of accounts audited. At the same time, if I'm undergoing any kind of profession, my limit is 50 lakhs. That if my total gross receipts exceed 50 lakhs, then I need to undertake the audit. In short, you just need to remember the limits which are mentioned over here. So this was the first category, that is compulsory under any law. Second is voluntary. Voluntary means it is not compulsory. If you want to get your books of accounts audited, then you can get it audited. So if I am any proprietorship concern, that is a single owner business. Second is a partnership firm, HUF, AOP, or any non-profit seeking organization. These organizations can get their accounts audited voluntarily. That is, it is not compulsory under any act. But if you feel that you want to get your books of accounts audited, you can get the same audit. Second was on the basis of time, under which broadly we had covered two topics. First was interim audit. I had explained you in this particular point, when an audit is conducted between two balance sheet dates. That is, I have told you, suppose I had conducted the audit for 31st March 2019, annual audit, and second annual audit for 31st March 2020. Now, between these two periodical audits, if in between I get my books of account audited, it is known as interim audit. What is the basic purpose? As I have told you, it can be declaration of interim dividend. It may be submission of the quarterly financial statements to some authority. As I have told you, the companies which are listed on the stock exchange need to submit their quarterly financial statements that are audited to SEBI, fine, Securities and Exchange Board of India. So again, there comes a requirement of interim audit. So basically, what is interim audit? When the audit is taking place between two periodical audits, then it is known as interim audit. Then we looked into the advantages and limitations for this. Second was the annual or the final or periodic or balance sheet audit, under which I had just told you, just remember all the four names because question may come under any name. What is it? First is it is commenced after the end of financial year. That is, जैसे ही मेरा year खत्म होता है, then I am starting with this particular audit. Second is it is carried on a continuous sitting. That is, it is not like that I am visiting the client place on a frequent basis. No, I am going in one at a time and in one shot. Like it may take 10 days, 15 days, 20 days to complete audit. I am completing my audit in a continuous sitting. And third is it is conducted only once in a year. If these characteristics are fulfilled, it is known as my annual audit. So this was on the basis of time, that is interim audit and annual audit. Then we had started with based on the viewpoint of continuity. That is how continuously you are attached to the client in terms of audit. So the first topic that we covered under this head was continuous audit. It is also known as detailed audit. Under the definition, I had just highlighted few words. I would like to focus on them again. First word was you are constantly engaged. That is, as an auditor, you yourself or any of your audit staff is constantly engaged in checking the books during the whole period, that is during the entire year, or where you are attending at regular or irregular intervals, which basically means that you are constantly in touch with the auditee. You are constantly carrying out the audit of your particular client. You may carry out continuously, maybe on a daily basis, or what you are doing is you are visiting the client place on regular intervals or at irregular intervals. What I want to say over here is it is not like that you are just going once in a year and carrying on the audit. No, you are constantly in touch. You may go on a fortnightly basis, you may go on a monthly basis. It is totally up to you. But you are getting the books of account audited at a continuous basis. Such kind of audit is known as continuous audit or detailed audit. So basically, if I'm into a business which is carrying on at a large scale, like I'm having thousands of transactions in a day, then it is compulsory for me, because I won't be able to get my accounts ready if I'm going for a yearly audit. So what I want to do is I need to go for a continuous audit. So I hope friends you are clear with what is continuous audit that we had covered in the last lecture. Then after we had seen the difference between continuous audit and annual audit, let's move on the second part. The second heading under this head is complete audit. This is the first thing that we are going to start with today, a new topic. In complete audit, I have written audit of each and every transaction. That is, I am not at all going on a sampling basis. I am covering each and every transaction that is being recorded in my books of account. So as an auditor, I am verifying each and every transaction. Second is, it is done where accounts have not been previously audited. Basically, where this is applicable is whenever I am conducting the audit for the very first time. That is, this is the first year of audit. Before this, no audit was conducted. So we don't know what were the remarks or observations of the previous auditors. This is the first time that the books are going to be examined. As a result of which, it becomes necessary to go in detail, because you want to be aware what all are the practices are being followed by the accountant, how the business is recording various transactions, because this is for the first time. So I want to learn how the practices are being performed so that I can find out whether they are maintained in a true and correct manner or not. As a result of which, when you are getting the books of account audited for the very first time, then it is advisable to go for complete audit, where you are going to check each and every transaction. And third point is, in other cases, it is not practical and feasible. It is but natural if I am not going to conduct my audit on a regular basis, or else it is not being conducted for the first time. It is not practical, fine, because it is not possible for an auditor to give so much time that he can check each and every transaction. For example, in a year, I am having 1 lakh bills of sales. It is not practically possible for me as an auditor to check each and every bill. So what I'm going to do is I am going to set some sampling criteria, and on the basis of same, I am going to examine that particular records. So complete audit is basically feasible where you are auditing that particular books of account for the very first time. Why? Because you want to know each and everything about that particular business. Once you have started with the same, in the next year, it is not necessary or even practical to go for complete audit. So just remember two things in this. First, each and every transactions are being audited, and second, it is being favorable when you are auditing the books of account for the very first time. I hope I'm clear with this part. Okay, let's move to the next topic. Partial audit. It means audit of only some records, some books, or some accounts for part or the whole year. And in this particular case, I am not auditing entire books of account. I am just going for some records, that is some transactions, or maybe some books. Like I feel cash book is supposed to be audited, so I'm just going for an audit of only cash book. Or some accounts, I feel there are certain issues in my receivables or debtors account, so I'm ordering the audit of all the accounts related to debtors. So as of now, what I'm doing is I'm not taking the complete set of books of accounts. I'm just focusing on some selected records, selected books, or selected accounts. If I'm auditing such selected things, then this is falling under the head of partial audit. Second is, it is possible in either sole proprietorship or partnership. That is when the business is being run by an individual single owner, or when you are running a partnership business, then you can go for partial audit. Like you can say, since it is not compulsory, you feel like cash book is something which is much more important as an individual businessman, then you can say the auditor to audit the cash book. But practically it is not possible in the case of companies. There it is compulsory under Companies Act 2013. So you need to go for complete audit and you cannot go for the partial audit. The third one is, it is done when the owner or partners suspect frauds in a particular records. I feel personally that there are certain frauds which are done by the cashier, and I am having a doubt that there may be some manipulation in my accounts, then I'm going to ask auditor to examine those particular records or particular cash book only. For that, I'm not going to tell him that go and audit each and every books of accounts. So when I'm suspecting any kind of fraud as an owner of the business, I may get my books of account audited, but up to that limited area, limited scope. As a result of which, partial audit means you are just focusing on a particular records or particular books or particular accounts. You are not going to examine each and every transaction, or you are not going to examine the complete set of books of accounts. If the audit is done under this way, then it is known as partial audit. So I hope you are clear with the three differences. First was continuous audit, in which I was constantly engaged with the auditing. Second is complete audit, in which I am checking each and every transaction. Third is partial audit, under which I am just checking selected records, selected books, or selected accounts. Let's go for the fourth one. Friends, just note this question is being asked as a 2-mark question also, or it may come as a short note also. So I would just like you to lay some more stress comparatively on this particular point, that is auditing in depth. Let's see what is written over here. Auditing in depth implies the examination of the system applied within a business, entailing the tracing of certain transactions from their origin to their conclusion, investigating at each stage the records created and their appropriate authorization. Basically, this definition is given by Taylor and Perry. Don't get panic. We are just going to break down this definition as usual so that it becomes easier for us to remember the same. First of all, I am reading the word auditing in depth. So as the name suggests, I am going in depth to check each and everything related to a particular transaction. What I'm going to do is the first highlighted word, let's take that part, tracing of certain transactions from their origin to their conclusion. For example, my debtor, Mr. X, has paid me 1 lakh rupees. So what is the transaction basically? I have received 1 lakh rupees from my debtor, Mr. X. Now, if I want to perform auditing in depth, what I'm going to do is I'm going to go to the inception, to the origin of the transaction. Now, why he is paying me? Because I may have done some credit sales. Yes. So I am going to the back the transaction of credit sales. Now, for doing credit sales, there should be a sale order that my customer Mr. X would have placed with me. So what I'm going is I am going to the detail in depth of each and every transaction. I am finding out the origin of a transaction. So what I'm trying to trace is from the beginning to the end. I am looking for each and every transaction. This is known as audit trail. T-R-A-I-L, trail. Audit trail basically talks about whenever you're auditing any particular transaction, you are going in depth. You are tracing the origin, like from where this transaction incepted, started, until now. That is, Mr. X has made the payment of 1 lakh rupees. So from the date of the order, the day when Mr. X has placed the order for purchase of goods with me, till the date of payment, I am going to check each and every transaction. I am going to check each and every copy of bill, of evidence, of any document, fine, between the transaction between me and Mr. X. If I'm going in detail in such a manner, tracing each and everything for a certain transaction from origin to depth, it is falling under the category of auditing in depth. What I'm basically looking for over here is at every stage, I'm investigating. Friends, I hope you are remembering the definition of investigation, going in depth of certain thing. So what I'm doing is at each and every stage, I'm entering into investigation. That is, I'm checking everything in detail. With the records created, that is each and every record that was created, I am auditing one of them. And second is I need to check that whether appropriate authorization is being given. Like in business, authorization to give certain discount lies with only certain person. For example, I am an old salesman at a particular business place. Owner has given me a limit that you can give maximum discount up to 10%. If customer wants discount of more than 10%, the power lies with the owner. So the power of the salesmen are limited. So what I'm going to check over here is at each and every stage of my transaction with Mr. X, whether every transaction has been occurred with appropriate authorization or not. No transaction should be done outside your power or outside the limit of authority that you are having. In short, what I want to say over here is when I'm talking about the word auditing in depth, I am mainly focusing on the thing of audit trail. That is, I am selecting certain transaction. I am finding out the origin of the transaction and I am investigating each and every stage from origin to the end, that is from beginning to the end. Plus what I'm doing is I'm investigating each and everything, like each and every records that are being created and checking that proper authorization was given for each and every transaction or not. Auditing done in this manner is known as auditing in depth. There are certain important points, keywords from the definition that I have taken in the below box. Let's read it out. First is certain specific transactions. Basically, we are not going to audit in depth for each and every transaction, we are going to select certain specific transactions that we really feel are important to be examined. Second is what I'm doing is I'm origining everything. I'm checking everything from origin to the conclusion. Third is investigating the internal check system at every stage of that transaction. What I'm checking is I'm checking internal check system. That is, I'm cross-checking each and everything, whether the controls which are placed at every level are sufficient enough to mitigate my risk or not. What I'm doing is I'm going to investigate each and every stage, like when the order was placed with Mr. X, whether that order was genuine or not, who has approved the order was approved by the appropriate authority or not. Whenever I have sold the goods, I would check whether the amount that is mentioned in the bill is actually correct or not. If discount is given, whether the discount is as per our policy or not. If I have written that I have sold 100 kg of goods, whether the goods physically dispatched and recorded in the books of account is matching or not. In short, friends, I am going to tally each and everything from origin to the end. Next is creation of records. As I told you, I'm going to look after each and every document, each and every evidence that is being involved in this particular transaction. And last is to check that proper authority has approved that particular transaction. There should not be a case when you are not having a power, still you have permitted to do the transaction. So auditing done in such a manner is known as auditing in depth. I would just like you to say that please lay more emphasis on this particular topic. I'm just giving you a minute. Take a quick overview on all the three types that I've mentioned on this particular slide. So friends, I hope you are clear with this particular slide, and we are done with the topic of classification of audit on the basis of continuity, under which we had seen four important points. First was continuous audit that we have covered in the previous lecture. Second is complete audit, that is checking each and every transaction. Third is partial audit, that is selected records, books or accounts are being audited. And fourth is auditing in depth, when each and everything from origin to the end are being examined, investigated in detail. Let's move to the next point. This is basically classification of audit on the viewpoint of scope. That is how much work you are doing is basically the matter of concern over here. So when the question comes from the viewpoint of scope, we are going to classify the audit into three different categories. First is internal audit, second is external audit, and third is branch audit. Let's take the first two. I have written this answer in the form of difference. So it is going to serve you two purposes. If it is asked as a difference, then also you can write the same. And if it is asked as a short note, you can make the points, writing all the points which are mentioned over here. So we are going to study it once, but we can gain its benefit for two times. Let's start. We are going to study it simultaneously, like what is internal audit and what is external audit. The first point is this auditor is appointed by, like who appoints the internal auditor and who appoints the external auditor. The first point written over here is appointed by, internal auditor is appointed by the management, that is the board of directors, while external auditor is appointed by the shareholders, that are the real owners of the business. So basically you can understand from this point, who appoints internal auditor? Answer is management. Who appoints external auditor? Answer is shareholders. Second point is it compulsory to appoint such auditor? Internal auditor? No, it is not compulsory. If you want your books of accounts to be audited, then you may appoint internal auditor, but it is not compulsory to appoint internal auditor. There are certain rules under Companies Act where such appointment becomes compulsory, but it is not applicable everywhere. It is just applicable in the form of companies. As a result of which, in general scenario, it is not compulsory to appoint internal auditor. But yes, it is compulsory to appoint external auditor. Third is fixation of nature and scope. That is, who is going to fix what is the work that is supposed to be performed by the internal auditor or the external auditor. So the question or the point over here means who is going to determine or who is going to fix the area of work of this auditor. In a case of internal audit, it is being decided by the management, because management is the one who is appointing such auditor. So management is going to prescribe what work is supposed to be carried out by the internal auditor. But in case of external auditor, the auditor is supposed to be appointed due to the requirement of any law, as a result of which he is bound by the scope which is mentioned in the law in that particular act. For example, I am a company and I am appointing the external auditor under Companies Act 2013. So I need to check the provisions of Companies Act 2013 and I need to follow the scope of working according to that particular act. So in crux, I can say, in case of internal audit, it is management who is going to decide what work is supposed to be performed by the auditor. But in case of external auditor, it is being decided by the particular law under which such appointment has been made. What is the designation of that particular auditor appointed? Internal auditor is no more than an employee. So he is performing as an employee to that particular organization. While external auditor is an independent person. He is not basically related to the shareholder or to the company. He is the independent outsider person. Next is qualification. Is it required that certain qualification is needed? In case of internal audit, no, it is not required. Even if you are a graduate, you are capable or qualified to do the internal audit. But in case of external auditor, you are required that you are a chartered accountant. CAs are basically qualified to do the external audit. Next is removal by when. That is, who can remove such auditor and when they can do that. Here, in case of internal audit, since appointment was done by the management, so they can be removed by the management. When? Anytime. For example, I feel कि अब मुझे इसकी जरूरत नहीं है, so I can easily remove internal auditor. But in case of external auditor, appointment was by the shareholders. So who can remove that? Only shareholders can remove them. But they can remove them only as per law. So they cannot go above law. They can do only the things that are permissible under that particular law. So if Companies Act says that an auditor can be removed only after the removal of 5 years, then shareholders cannot remove them in between. So there are certain prescriptions that are being given in the law and you need to follow that particular rules. Next is, can he attend AGM, that is annual general meeting? Can such auditor attend the same? Internal auditor, no, he cannot attend. But external auditor, it is yes, he can attend that annual general meeting. Next is audit type, like we had studied as of now. What kind of audit it is? In case of internal audit, generally it is a continuous audit. That is, the internal auditor is being constantly in touch with the client business and he is constantly auditing each and every transaction on a regular basis. So it is a continuous audit. And while in external audit, it is an annual audit. That is, auditor is auditing the books of account generally after the end of particular financial year in one sitting or a continuous sitting. So as a result of which, external audit is in a form of annual audit. Next is, what kind of audit technique is being used? In this internal audit, the technique used is complete audit, which means each and every transaction are being tested and examined. But in case of external audit, auditor is not having such sufficient time and it is not practical enough to check each and every transaction. As a result of which, test check, that is on sampling basis, the data are being examined. So in case of internal audit, each and every transaction, that is, there is a complete audit. But in case of external audit, there are test checks. That is, only sampling basis transactions are being checked. Liable to, like, the internal auditor is liable to the management. Why? Because management has done his appointment, so he is liable or answerable to the management. And here the appointment was done by the shareholders, so he is liable to the shareholders. Simply you need to remember, जो आपको appoint करता है, you are going to answerable to that particular person. Next is presentation of reports. As an internal auditor, I had prepared my internal report. To whom I am going to present this particular report? Answer is again management. Management ने मुझे appoint किया. I am going to present my report to the management. And in case of external audit, shareholders has appointed me, so I am going to present my report to the shareholders. The last and the most important point of this answer: what is the main aim to appoint internal auditor? It is to help the management in decision making, detection and prevention of frauds and errors. Because let's elaborate these 2 points. Whensoever management wants to take any kind of decision, what they be in a need of us, they want up-to-date financial information as on that particular date. Now, if I'm just relying on an external audit, I'm just going to get my account audited once in a year, where it is not possible to get the up-to-date information in the mid of the year. As a result of which, if I'm having any internal audit, that I can get timely data updated, as a result of which I can make any policy decision at any point of time. And secondly, if I feel that accountant is going or doing any fraud, or any employee is doing something wrong, or there is certain error, internal auditor is going to check each and everything on a basis of continuous audit, as a result of which it becomes easier to identify, to detect and to prevent any kind of fraud or error. As a result of which the main objective, the main aim of internal auditor is to help management in decision making and identify and prevent errors and frauds. What is the objective for an external auditor? It is to check that whether the financial statements show true and fair view of the financial statements. This is nothing. This is what we had studied in our very first lecture in the definition of auditing. So my actually external auditor is going to check the truth and fairness of the financial statements. In crux, to cut it short, entire answer, I can say internal auditor is the one who is appointed by the management. It is not compulsory. Management feels like they have a need to get timely updated accounts so that they can make good decisions, or errors or frauds can be detected. To solve that purpose, management is appointing the person to get their books of accounts audited on a continuous basis. Fine, there is no particular qualification required, but since management is appointing in, that particular person is going to work as per the guidelines of the management. He is liable to management. He is going to present his report to the management. This is the case of internal audit. In case of external audit, he is being appointed because it is required under any law, like you have studied in the first part of this particular chapter. Like for example, you are going to appoint the auditor under Income Tax Act 1961 or Companies Act 2013. Fine. So you are appointed not by the willingness of the management, but because you are required to be appointed by any law. So you are appointed by the shareholders. You are answerable to shareholders. You need to report and present your report to the shareholders. Your scope, that is what you are supposed to do, is being decided by the law under which you are appointed. What is your main objective? To verify and ensure whether the books of accounts or the financial statements are showing true and fair view or not. I hope, friends, I am clear with this particular point. So by now today we had covered two basic classification. First was on a basis of continuity, under which we had seen already continuous audit, and today we had covered complete audit, partial audit, and auditing in depth. As I have told you, auditing in depth is one of the important answer from the viewpoint of exam. So I request you to prepare it in a wonderful manner. And then after, we had started with the topic of basis of classification from the viewpoint of scope. That is, what is your area of work? Basically, internal audit in external audit is what I have taught you today. In the next lecture, we are going to start with branch audit. So with this, I, CA Pujin Kapadia, thank you all for your patient listening and hope to see you soon in my next lecture. Thank you, friends.